Welcome back to Fintech Fair Play, where we analyze what others won't say about financial technology. Last week, we analyzed Wise's £12 billion departure from London. The pattern accelerates. Now we have the numbers. £21.8 billion in fintech IPOs sit in London's pipeline. 6 companies, 6 decisions, 6 potential departures. The data confirms our Wise analysis. Monzo, £6 billion valuation. Starling Bank, £10 billion. Zilch, $1.6 billion. Zopa, $750 million. Clearbank, $650 million. Oak North, $2.8 billion. Combined value, £21.8 billion. All facing the same liquidity constraints that drove Wise to America. Monzo represents the critical test case, £6 billion valuation with significant growth potential. The company could command much higher valuations in U.S. markets. Banking insiders express particular concern about Monzo's departure risk. Why? The growth trajectory mirrors Wise before its exit decision. Our previous analysis identified the pattern. Wise generated 30% returns in London. Result: departure to United States. Monzo shows similar success metrics with identical constraints. Limited institutional investor access, insufficient trading volume for large shareholders, valuation discounts compared to U.S. competitors. U.S. markets consistently value fintech companies higher than London. SoFi Technologies trades at 36.7 price-to-earnings ratio. Wise trades at 27.2 PE ratio. Similar market caps, different valuations. The discount reflects market structure problems, not company performance. Monzo faces identical mathematics. Revolut CEO stated London listing is not rational. $45 billion company choosing American markets. The pattern extends beyond individual company decisions. Systematic market failure creates identical pressures for all major fintechs. Monzo executives observe these precedents. Mathematical logic points toward U.S. listing. Starling Bank faced £10 billion IPO prospects. Financial crime control failures damaged listing timeline. Regulatory problems compound market structure weaknesses. London's compliance requirements increase without providing market advantages. U.S. markets offer superior infrastructure with clearer regulatory frameworks. London Stock Exchange lost 88 companies last year. The exodus accelerated beyond fintech sector. Every departure reduces remaining companies' market attractiveness. Institutional investors shift focus toward deeper, more liquid markets. Self-reinforcing cycle continues downward. Dealroom tracks fast growth company funding globally. United States raised $18.6 billion in fintech investment during 2023. United Kingdom raised $3.2 billion. 6-to-1 investment ratio favoring American markets. London surpassed San Francisco Bay Area in 2022. Bay Area regained leadership this year. New York ranks 3rd globally. Capital flows follow listing jurisdiction preferences. British fintechs attract more startup funding than France, Germany, China, India, Brazil, and Canada combined, according to KPMG. But mid-sized companies face systematic valuation discounts compared to U.S. peers. Chancellor Rachel Reeves announced pension fund backstop powers, forcing institutional investment in British assets. Aviva CEO Amanda Blank called it sledgehammer to crack a nut. Market participants argue the measures don't address core problems. Forced investment cannot solve liquidity and infrastructure deficits. Companies themselves say no decisions have been made on timing or venue, but market mathematics remain unchanged. British fintechs attract more startup funding than France, Germany, China, India, Brazil, and Canada combined, according to KPMG data. But mid-sized companies face systematic valuation discounts compared to U.S. peers. Growth capital disappears precisely when companies need expansion funding. Monzo approaches exactly where the discount appears. Success in London creates departure pressure, not retention incentives. Richard Hunter at Interactive Investor stated clearly, at these valuation levels, any number of companies could leave London. Tax breaks for companies listing, abolition of stamp duty, lighter regulation proposals. None address the fundamental institutional investor access problem. Structural changes require infrastructure investment, not policy adjustments. Monzo's choice involves multiple considerations beyond simple valuation. Customer base concentration in United Kingdom, regulatory relationship with UK authorities, brand positioning as British challenger bank. But financial mathematics ultimately determine listing decisions. Superior liquidity and institutional access override emotional factors. Wise justified its departure as reflecting global business scope. Monzo could employ identical reasoning. Digital banking transcends geographical boundaries. International expansion requires capital from global institutional investors. London's market constraints limit international growth funding. No decisions confirmed on timing or venue, but market pressures intensify with each major departure. Wise's July 2025 vote establishes precedent. Other companies observe outcomes and adjust strategies accordingly. First-mover advantages exist in market selection. Monzo faces increasing pressure to announce intentions. When major fintechs choose American listings, competitive dynamics shift. Access to US capital markets provides scaling advantages. London-listed competitors face systematic disadvantages. The gap widens with each departure decision. Remaining in London becomes increasingly irrational. Monzo could maintain UK operations while listing in America. Operational regulation remains with UK authorities. Capital market access improves through US listing. This structure provides optimal regulatory and financial positioning, similar to strategies employed by other major fintechs. Monzo's £6 billion decision represents London's next critical moment. The company embodies British fintech innovation. But success in London creates identical pressures that drove Wise's departure. Mathematical realities favor American listing advantages: institutional access, trading liquidity, and valuation premiums. When will Monzo announce its choice? The $21.8 billion pipeline hangs in the balance. Each departure accelerates the next. London's fintech leadership faces its defining test. Subscribe to Fintech Fair Play for continued analysis of these market shifts before they become headlines.